Closing Thursday's session at 10 cents per share may be concerning for shareholders of Mullen Automotive, but I don't think it's panic stations just yet for the budding EV producer.
Send it to the frickin' moon, idiot.
Hi again, everyone. I hope you're all doing really well. So today we're going to be talking about the recent developments in Mullen Automotive, ticker symbol MULN, and how it's impacting the company's stock price. It is important to note that the company has hit a major milestone in the past few weeks by closing on a large financing deal, as well as making the first deliveries of its Class 1 EV cargo vans. So despite these developments, why is the share price still slipping now at 10 cents per share? Now, to start with, some may argue that these developments have not been met with much excitement based on the recent price action. However, we must consider that the market's response to these headlines does not necessarily mean that Mullen Automotive is not making progress. In fact, these developments may signal even more progress for the company in the months ahead. Basically, more funding means there is very likely to be even more deliveries in the coming months as the company has the means and is at the capability and level to do so. It is understandable that Mullen investors may be concerned about the recent price action, especially given the losses that have already been experienced. However, we must keep in mind that the progress takes time and it may not always be reflected in the stock price right away. We have seen similar situations with other EV upstarts where progress has taken time to translate into better results for the company, so this could very much be the case for Mullen Automotive. Moreover, Mullen Automotive is pursuing multiple opportunities in the EV space with a particular focus on the commercial vehicles. The recent announcement about the deliveries of its Class 1 EV cargo van is a bona fide sign of progress in this area. While it is true that it may take some time for the company to reach profitability with its commercial EV offerings, we must consider the potential growth opportunities in the market. Furthermore, the recent financing news is also a positive sign for the company. The fact that Mullen Automotive has secured another 9-figure amount of fundraising is impressive, especially given that the company has been largely abandoned by the market. While the promissory notes may come with a steep interest rate of 15%, this funding will provide the company with the necessary capital to continue its operations and pursue further growth opportunities. It's also important to consider that the recent price action may be an overreaction by the market. Mullen Automotive is an early stage electric vehicle manufacturer, and as such it is not uncommon for these types of companies to experience significant volatility in their stock price. The recent dip in the stock price may present a buying opportunity for investors who are willing to take a long-term view on the company's potential growth prospects. So in conclusion, while the recent price action may be concerning for some Mullen investors, we must keep in mind that progress takes time, and Mullen Automotive has hit a major milestone by closing on a large financing deal and making its first deliveries of its Class 1 EV cargo vans. These developments may signal even more progress for the company in the months ahead. It is important for investors to consider the potential growth opportunities in the EV space, particularly in commercial vehicles, and take a long-term view on the company's potential. While a reverse stock split may be necessary to maintain compliance with the NASDAQ minimum bid price requirement, it is important to weigh the potential benefits and drawbacks of this option before making any decisions in buying the stock. Not that what we say here is investing advice. Anyway, what do you think about all that is happening with Mullen Automotive at the moment? Is 10 cents per share a true reflection of what the company is worth, or is it a bargain at the price of considering the moves the company is making towards production and vehicle deliveries? Let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favor. Cheers.